Ondas Inc. is currently trading at 12.03 USD, showing a decline of 1.10 or 8.38% so far in today's session. While a nearly 9% drop might look like a reason to panic for some retail traders on the Robinhood app or those checking their individual brokerage accounts during a lunch break, the reality beneath the surface is far more complex than a simple red candle on a chart. If you were looking at the screen right now and thinking this is just another volatile small-cap tech stock losing its footing, you were missing the massive capital shift that just occurred. The expectation was that Ondas would continue to struggle with its balance sheet while trying to scale its drone technology, but the reality is that the company just pulled off a staggering $1 billion capital raise that has completely altered its financial DNA. We are seeing a massive disconnect between the current intraday price action and the long-term structural strength the company just bought for itself. The immediate drop we are seeing today is likely a reaction to the massive dilution that comes with such a significant offering, yet it has provided the company with a pro forma cash balance exceeding $1.5 billion. This puts them in a position where they have more cash than most of their competitors have in total market value. When you look at the landscape of online investing right now, most people are chasing the momentum of a Tesla stock or trying to find the next Nvidia stock, but they often overlook the infrastructure plays that make autonomous systems possible. Ondas is positioning itself as the backbone of autonomous aerial and ground robotics, and this recent dip is the market trying to digest the sheer scale of their recent moves. The common belief among many traders using platforms like SoFi or interactive brokers is that a company raising this much cash is just trying to survive. They see a high-growth, high-burn business and assume the worst. However, the deeper analysis suggests that Ondas is moving from a defensive posture to an aggressive, acquisition-heavy strategy. They didn't just raise enough to keep the lights on, they raised enough to buy out their competition and consolidate the fragmented drone and private wireless sectors. This is the classic tension between short-term expectation and long-term reality. The market expects immediate profitability, but the reality is that Ondas is building a massive moat in the defense and critical infrastructure sectors that could pay off significantly over the next few years. If you look at the institutional activity, you will notice some very interesting shifts. While some smaller funds have been trimming positions, giants like Goldman Sachs have previously boosted their holdings by triple-digit percentages. Institutional investors now own nearly 38% of the company. This suggests that the smart money is looking past the daily swings and focusing on the underlying revenue growth. In their recent Investor Day, management actually raised their 2026 revenue guidance to a range of $170 to $180 million, which is well above the previous consensus. They are essentially telling the market that they have a pipeline that is accelerating faster than anyone anticipated. The trading volume today has been heavy, and when you see this much movement on high volume, it usually means a transfer of shares from weak hands to strong hands. Many investors who got in early and saw the stock surge 500% over the past year are finally locking in gains. This creates a natural ceiling in the short term, but it also establishes a new base for the next leg up. If you are managing your own portfolio through Schwab Intelligent Portfolios or using various investing sites to track your performance, you know that finding a company with a 180% increase in its backlog is rare. Ondas went from a $23 million backlog to over $65 million in just a matter of months. That is not just a statistical fluke, it is a sign of massive commercial adoption in the defense sector. I want to pause here for a second and get your take on this specific sector. Comment below how many shares of Ondas you currently hold, or if you are looking to enter a position after this recent pullback. It is always interesting to see how the community is positioning itself during these high-volume volatility events. Moving into the core of what this company actually does, we have to look at the two distinct pillars of their business. Ondas Networks, and Ondas Autonomous Systems, or AOS. The network side is focused on software-defined wireless broadband technology. Think of this as the private, secure internet for industrial giants like railroads and utilities. They are working with the Association of American Railroads to implement a new standard for communications across thousands of miles of track. This is high-margin, recurring revenue that provides a stable floor for the business. But the real excitement and the reason why the stock has become a favorite for those into self-investing and active trading is the AOS division. Through acquisitions like American Robotics and Aerobotics, Ondas has become a leader in the drone-in-a-box market. These are fully autonomous systems that don't require a pilot on site. They can live in a docking station on a remote oil rig or a sensitive military border, launch themselves, perform an inspection or surveillance mission, and return to charge without human intervention. This is the technology that the Israel Ministry of Defense recently selected for their Drone Hives project. It is also the technology that is seeing massive interest in the United States for border security and critical infrastructure protection. They aren't just selling a drone, they are selling a complete automated intelligence solution. The older reports from 2024 and early 2025 often highlighted the company's going concern warnings, which is a standard accounting disclosure when a company is burning through its cash. Many traders who rely on automated screeners or basic fidelity wealth management tools might have seen those warnings and stayed away. But that's exactly where the expectation versus reality gap created an opportunity. The reality was that their technology was being validated by high-level government contracts even while their bank account was low. Now, with the $1 billion raise, those survival concerns have been wiped off the map. They have effectively traded a massive amount of equity for permanent stability and the ability to scale. When we look at the macroeconomic pressures, it is clear that the defense sector is becoming a primary focus for many investors. With global tensions rising and a push for more domestic security, companies that provide autonomous defense solutions are in high demand. This is why you see so many people looking for investment help on how to gain exposure to this niche market. Ondas is also expanding its reach into international markets, including a planned investment in a Ukrainian developer to bring battle-tested drone technology to the U.S. and allied markets. This is a brilliant move because it allows them to skip years of development and go straight to solutions that have already proven their worth in active conflict zones. Looking ahead, there are several catalysts that could reverse today's downtrend. The most immediate is the official year-end earnings report coming in March. If they can confirm the preliminary 2025 revenue numbers that beat their targets by over 50%, it will prove to the market that the growth is real and sustainable. There is also the potential for more acquisition news. With $1.5 billion in the bank, management is likely already looking at smaller, innovative firms that they can fold into their ecosystem. Each new acquisition brings more intellectual property and, more importantly, more government relationships and recurring service revenue. The risk, of course, is execution. It is one thing to have a lot of cash, it's another to integrate multiple companies and technologies into a cohesive platform. This is the reality that the skeptics are betting on. They think the company will struggle to manage its rapid expansion and that the dilution has made the share price too heavy to move. But if you look at their recent appointments and the way they are shifting their corporate structure, even changing their name to the more streamlined Ondas Inc., it shows a management team that is maturing. They are moving away from being a collection of startups and towards being a unified industrial technology powerhouse. For those who use the Fidelity mobile app or the Robinhood trading platform to keep an eye on their daily P&L, it is important to remember that companies in this phase of their growth are rarely stable. The volatility is the price you pay for the potential of massive upside. We have seen this play out with other high-growth tech stocks in the past. The market hates uncertainty, and right now, the uncertainty is how fast the company can turn its massive cash pile into even massiver revenue. The reality is that they already have the backlog and the contracts to support their raised guidance. The growth isn't just a projection, it's already in the books. As we wrap up this analysis, it is clear that Ondas is at a major turning point. The expectation was that they were a risky, cash-poor drone play. The reality is that they are now a well-funded, aggressively growing leader in autonomous systems with a clear path to significant revenue scaling. We have seen a massive disconnect today between the intraday price action and the fundamental transformation of the company's balance sheet. While the initial reaction to dilution is often a sell-off, the long-term implications of having $1.5 billion in cash cannot be understated. It gives them the staying power and the firepower to dominate their market. In summary, we started by looking at the 12.03 USD and the 8% drop, which